Other than that, we should just go play golf. I mean, really. So the name of the game is this happened in when? 2002, that you got the manufacturing expansion, 2001, 2009 back half. This is a recovery. So you might get a slow in tech and a recovering in the unmagnificent manufacturers that drive real growth, which is symptomatic of the people at the lower economic strata outperforming like they did in the previous administration. You can see here from at this level. So I would right up here, 2016, 17, 18, that was a period when the people at the lower end really started out to outperform the people at the higher end in terms of real wages, and then it collapsed with COVID, et cetera. Global trade dynamics appear to be stabilizing. Exports are on the rise, so that's good. Remember, exports ground to a halt out of Asia. That's coming back. Internet advertising indicators suggest a stable digital advertising market. So this peaked in 2021 with the tech index, and then tech crashed, spending crashed, and now it's starting to recover, and that's a positive sign. Looks a lot like 2012 and 2003, and that was good for multi-year bulls.